Okay guys, last night we had the Bank of Japan's latest monetary policy decision. And as expected, the bank held its interest rates at record lows where they've been for like the last 20 years, minus 0.1%. However, the bank has made a dovish shift on QE, its quantitative easing program. So the bank announced that it's gotten rid of a previous limit on how many government bonds it can buy. So basically it's going down that route, or it's indicated the door is open to limitless QE, just like the Fed has done a couple of weeks ago. They've also substantially increased the size of their corporate bond quantitative purchasing program, basically. Very, very dovish stuff from the BoJ. So why did JPY not sell off? Well, two major things going on here. First of all, unfortunately, this wasn't actually a surprise at the meeting last night. The Bank of Japan might be a bit upset about that. Maybe they wanted to surprise the market. But last week, I believe it was on Thursday, a Japanese paper pretty much managed to leak this decision to the press. So last Thursday, we did see a bit of a dovish move in JPY. JPY selling off on limitless QE and bigger corporate bond QE program. So when the Bank of Japan announced that program today, wasn't a surprise anymore because we were already expecting it, so no move. The other thing, which I've heard a couple of other traders talking about, is this thing about limitless QE. Most traders aren't taking it as seriously as they are with the Fed. A lot of people think it's more kind of like symbolic. It's more for show than it is anything else, because basically the Bank of Japan has something called a yield curve control program. That is where it targets bond yields. Basically a yield is the interest rate on a bond when you buy a bond, how much returns you get on that bond every year until you get paid the full amount back. And the BoJ targets these yields at 0% for the 10-year bonds and lower, and they do that by going into the market to buy bonds to push up the price if needed, or sell bonds to push down the price if needed. So if they have this yield curve control program, but then they start doing huge bond buying, then actually the bond yields are going to move below their target because they're going to push the price of the bonds up, which pushes the yields down. So it's almost like unlimited QE and their yield curve control program are kind of like contradictory. So most people think that really they're just going to stick with yield curve control, and this QE announcement was more just for show than anything, which is why JPY didn't really need to move that much off it, because if it's for show, it's not really a big deal for JPY. But anyway, guys, these central banks, obviously they are key for trading FX. You need to understand how these decisions can move FX markets. Really, really important. We're going to be covering them all at Freak Network. That is pretty much it from me for now, and I'll see you in the next one.